Good morning, everyone. We just heard it from the previous panel. Adoption in financial markets doesn't happen overnight. And I think we can all agree after 14 years of having the Bitcoin blockchain launched, the adoption is still not going to happen overnight. But what we do have is we have some tools already available that can be used in corporate treasury to make sure that current processes are supplemented and run a bit more smoothly. And that's really what I talk about today. What I'm not going to do is I'm not going to praise the blockchain, but what we are going to do is we're going to have a very critical look at real use cases and some very real challenges that you then run into. And all of that focused on client use cases in corporate treasury, of course, all anonymized. Now, over the next 20 minutes, we will mostly be looking into two use cases, one around capital/cash management. That's going to be the main focus. And then we're going to have a small look into bond issuances. But given most of the topics at the conference, I think we can keep this part short because there will be lots of discussions on this. Now, before we jump in, of course, I'll briefly introduce myself, and then we will have a short conclusion. And please bear with me, every now and then I still have a cough. Now, if you look at the agenda, you will see the name Justus Schleicher. That is not me. Justus, unfortunately, is off sick, so I'm filling in for him. I am Robert Richter. I am a director at Zanders, heading the financial risk management team as well as the blockchain team. Now, my initial background is credit risk modeling. Been doing that for well over 10 years and decided to move into the blockchain space quite a while ago. Since then, I've been a frequent lecturer at the Frankfurt School of Blockchain Center, and I'm also doing a PhD focusing on the valuation of decentralized finance protocols in my spare time whenever I have any. Now, as I mentioned, I work for a company called Zanders. We are a consultancy of about 330 people by now, operating out of 10 offices on 4 continents. And we've been around for well over, close to 30 years. So we've seen our fair share of customers and projects. Now, in terms of service offering, what we do is we focus on 2 very distinct areas, treasury and risk. And within those areas, we also have a technology business where we look into things like transfer pricing or credit risk modeling. But we will focus today on use cases from treasury and risk. And within treasury, we look into things like strategy, operations, transformations, digitization, etc. And similarly, on the risk side, we look at the strategy side as well as the management and modeling aspects. Now, in case you remember me from my talk at the Crypto Asset Conference in March, I very much stress that we look into financial risk management. Things have changed slightly. We recently acquired a company called Fintegro who are focused on non-financial risk, so we now cover the entire spectrum. But let's start getting into the actual corporate treasury topic. Now, the way we look at this is we see activities and enablers. Now, activities really are things you can do right now. And enablers are the type of things you have to put in place in order to actually do those things. And when we look at treasury, we divide this into 6 subcategories. So within the activities side, we have treasury operations, like cash management or custody. We have financial risk management, things like looking into what type of risks are associated with this new asset class. And I am going to call crypto a new asset class, sue me. But there you have FX risks, you have technology risks, counterparty risks in some cases. And then we have the corporate finance side, of course, for example, bond issuance or supply chain finance. On the enabler side, of course, we need to make sure that certain things are in place in order for all of this to be able to be turned into reality. For example, you need new skill sets because crypto is a new area. You need to find the right business partners, and of course, you need to upgrade policies. Now, that sounds trivial, but if you start operating in the blockchain space, you might be operating smart contracts or a dApp. And then you need to have processes in place to make sure that your smart contracts are funded, and you need to have a process in place to make sure they stay funded. So what happens, for example, if gas fees go through the roof? you need to have a process in place. You can't just, well, large corporates can't just go out and buy things like this. That then, of course, translates into processes and systems. So, for example, you need to make sure that you incorporate your crypto into your existing processes, which, of course, means you need to have your systems ready for this. And our favorite topic, governance and control, of course, you need to have certain governance processes structured around this, specifically around upcoming or current regulation and accounting treatments. Now, what we're going to do in the next 10 minutes or so is we're going to look into treasury operations, specifically cash management, and briefly touch on the corporate finance aspects of these activities. And when I say capital management here, we mean the cash management, really. And some of the stuff on the slide isn't new. Cross-border payments, we all know blockchain is made for, essentially. And we also know what the difficulties are in the traditional model. We know that there's inefficiencies, things take a long time when you have very long-distance transfers. And we also know that there's a number of intermediates sort of in between the process. Now, that's something we don't need to focus on too much. What's interesting is, if you look at it from a large corporate side, I don't think a large corporate is going to switch onto a blockchain for all their treasury management system operations. But what we can do is we can supplement things. So put yourself in the shoes of a corporate treasurer of a multinational. Usually what we do, or what you would do, is you have internal limits for your exposure management. And let's take an example. Let's say you have a business partner and your exposure limit is 20 million. You might start monitoring that more closely once you reach 15 million. Now, it's very unrealistic to say all of these 15 or 20 million are going to be done on a blockchain. But what might be interesting to you is, specifically if you're dealing with countries where it takes a long time to get money out of a country, and there are certain countries where that is the case, it can take up to 6 months, then you might want to start monitoring that very closely once you get to the 15 million threshold that you've set internally. And that's really where then blockchain or cryptocurrencies come in, because what you can do is you can manage your processes in a mix of fiat and crypto. So up to the 15 million limit that you've set yourself internally, you want to make sure you don't breach the 20 million, because all of a sudden then your CFO is going to start breathing down your neck. So why not handle all the additional transfers after the 15 million, or the exposure that is outstanding, on a blockchain? And that is something you can do. It is a lot faster, not necessarily always cheaper, and we're going to have a look at that why, but you can avoid internal issues if you start mixing fiat and crypto, which again means we're not switching to everything overnight. Now, in terms of process, I don't think we need to go into all of the details here because we know how it works, right? We have one company that needs to send money to another. You go through an exchange or some sort of broker, and then that company, you have your coins in your wallet, you send it over to the other address, and then that company can convert that into fiat currency again. That's not necessarily new, in my view. However, what is new is some additional insights. Now, first of all, let's look at the options that you have as a treasurer. Option, I hope you can still hear me okay, option A, right there, is I have crypto on my books and I convert it immediately. So basically you avoid any sort of risk related to cryptocurrencies. Now, of course, first of all, this here is supposed to say option C, not option A again. So option C would be to keep all your crypto on your books and then use it, for example, to have additional to make additional payments in crypto, and that has certain implications. So you all of a sudden have to have that on your book, and you have to have it reflected in your books. Then custody all of a sudden becomes a topic for your CFO. And of course you have option B, which is somewhere in between, essentially. Now, if we're being honest, really where we are in the industry in corporate treasury is either here or somewhere there on the spectrum between 0 and 100%. What you have to bear in mind is corporate treasurers are risk adverse. So you're not going to have someone say, oh yeah, I love having crypto on my books, because there can be volatility associated with that. And quick side note, not necessarily everyone knows what a stablecoin is. There's still a lot of misconceptions saying, oh, crypto is extremely volatile. Not necessarily the case if you use stablecoins, but that knowledge also has to be transmitted to the target audience. But there's one much more important fact, which is why corporate treasurers are still in this area here. Their cost basis. The cost basis is not crypto, and that's something we very, very frequently forget. You can, of course, have ETH on your books, but then what do you do with ETH if I get paid in euros? You still have to make sure that you convert the money into ETH. And that's something, again, we need to bear in mind when we speak to clients and, yeah, actually just our clients and our stakeholders. Now, there are some pitfalls, and some of them you already know, so we're not going to go through all of them, but of course you have to bear in mind legal aspects, you have to bear in mind accounting, your CFO and finance departments needs to know how to incorporate crypto. Costs can be significant upfront as a one-off investment, but more importantly is the exposure management, that part right here. Now, there's something that is, so we always say crypto is cheap, right? Crypto isn't necessarily cheap. Sometimes it's actually more expensive to convert a currency into USDC than it is to convert that currency into USD. So let's bear that in mind. That can kill some use cases. However, there's also an argument against that, because let's say we are operating in a country where it takes a long time to get money out of it. Argentina, for example, is one. Getting USDC out of that country can take up to 6 months. Now, looking at current interest rates, say, for example, in South American countries, we have to consider the time value of money. Having your money locked up for 6 months can really become expensive. So, for example, if you look at Mexican rates, we're talking 11% just central bank rate. If you talk corporates, might be 15%. If you lock that up for 6 months, that's a discount of 6.9%. So even though the initial conversion might be cheaper, might be more expensive, overall, it might still be cheaper if you consider your opportunity costs and the time value of money. So just because it looks expensive in the beginning doesn't necessarily mean that, that it won't help your treasury operations. Now, looking at time, let's quickly have a look at the next steps. So, of course, if that is something you want to, main message is make sure that you look at all the aspects. Don't just look at the upfront cost, also make sure you consider opportunity costs. And then you, of course, have to find the right ecosystem and partners to partner up with. Now, let's move on to the second topic. And we say here private bond issuance. What we really mean is, in German, Inhaberschuldverschreibung. So anything that is relevant under the Electronic Securities Act, the EWPG. Now, what I'm showing here is a future state. We just heard it. There are still some aspects missing that need to happen in order to really have a process that is fully blockchain-based. If you look at that future state process here, up here, what you'll notice is the bond issuance currently happens on the chain, so step 1 and step 3. So issuance and transfer happens on a chain. Realistically, 2 and 4, they still happen in Swift. That's something we also just heard from our panelists in the previous session. Also, we're mostly looking at a primary market, not a secondary market just yet. But that is coming, ultimately. So for the corporate treasurer, that will give him another tool to start looking into how to access capital markets. Now, if we look at the market and we look at the status quo, is that a huge topic for everyone? No. Of course, we have front runners like Siemens that we all know about, but a lot of corporate treasurers that actively play in the market are now looking into experimenting with the smaller tickets. So are we close to mass adoption? Maybe not. But it's certainly coming, and there is a lot of experimentation happening in the background that we don't see yet. And there are some benefits to this. Again, we're not going to go through all of them, because we know that blockchain-based processes can be more efficient. But the lower cost, that's one to bear in mind, that one up here. Because once you've gone through the pain of the initial setup, and that might be slightly more expensive, your issuances are 50% cheaper, ballpark. So running costs or variable costs will be reduced in the long run. Now, if you look at some slides, you will find other benefits like banking hours are no longer applicable or higher transparency. I would challenge that, to be perfectly honest. If you look at current developments, specifically in regulation with regards to the BCBS crypto standard, we're not quite sure yet whether we will really go down a public blockchain route. But maybe that's a topic for another day. And also I presented on this a while ago, so in case you want to have a look, I'm sure the recording is online. But the lower cost aspect and the additional quiver, if you will, is one of the main benefits for corporate treasurer. And of course, infrastructure is changing. We again just heard about the DOT pilot regime. So that is something that needs to be borne in mind also in the large corporates, not just the FIs. Now, in terms of time, I think I'll move swiftly on, but long story short, market overview says there are some companies or governments that are already experimenting with this. And if you look at the list on the BaFin website about issuances under the EWPG, so the Electronic Securities Act, that list is very steadily growing. So we do see more and more experimentation in this area. Now, correct me if I'm wrong, but I have a few more minutes. Perfect. Some pitfalls to consider. The market isn't as liquid yet, of course, as the traditional market. Again, something that banks need to consider in the BCBS world and capital requirements. You have sunk costs up front. You have to go through the initial setup once. And of course, it raises new questions like, who does the custody? Do we go with, for example, a provider like Sviat, who then has a custodian right there available, or do we do something else? These are questions that then need to be answered on an individual basis. Now, of course, similar to the previous slide in the previous section, there are certain steps that you can take to look into this. One of the key points is you need to find the right ecosystem, you need to find the right partners, and of course, you really need to look at the costs holistically, not just from a one-dimensional viewpoint. And let me wrap this up. Main point from my presentation today is you don't have to go left or right. You can actually just use what blockchain currently offers as an additional quiver in your tool, additional arrow in your quiver to make processes much more efficient than they currently are. So we can optimize rather than completely revolutionize. And that is something that is happening right now. So in case you want to find out more about this, myself and some of my colleagues are still around. But thank you very much for your attention and enjoy the rest of the conference.